Picture this. While everyone's watching gold hit new records, silver is coiling like a spring ready to explode. We're not talking about a gentle rise here. We're talking about a potential black swan event that could send silver prices into triple digits. And the signs are everywhere if you know where to look. What's happening this week isn't just another market fluctuation. It's the convergence of multiple crises that could trigger the most dramatic silver surge we've seen in decades. Stay with me, because by the end of this video, you'll understand exactly why smart money is positioning themselves right now, and why waiting even a few days could mean missing the opportunity of a lifetime. Let's start with what's actually happening right now that has veteran traders losing sleep. The global silver market is facing something it's never experienced before. A perfect storm of an industrial demand explosion, supply chain breakdowns, and a financial system that is showing cracks we haven't seen since 2008. But here's the kicker. This time, silver isn't just a precious metal or an inflation hedge. It has become absolutely critical to technologies that governments around the world have declared essential to national security. We're talking about solar panels, electric vehicles, 5G infrastructure, and military applications. Every single one of these sectors is screaming for more silver, and there simply isn't enough to go around. The numbers are staggering when you actually break them down. Global silver demand hit over 1.2 billion ounces last year, but here's the problem. We only mined about 830 million ounces. That's a deficit of nearly 400 million ounces, and it's getting worse every single quarter. Now you might be thinking, well, can't we just mine more? Here's where it gets really interesting. Unlike gold, where you have dedicated gold mines, roughly 70% of silver comes as a byproduct of mining other metals like copper, lead, and zinc. So even if silver prices double or triple, miners can't just flip a switch and produce more. They're locked into mining whatever base metal they're primarily extracting, and silver just comes along for the ride. But wait, it gets even more intense. This week we're seeing three major catalysts converging at the exact same time, and this is where the black swan potential comes in. First, several major industrial users are reportedly scrambling to secure physical silver supplies because their normal suppliers can't guarantee delivery timelines anymore. We're hearing whispers from inside the industry that some manufacturers are paying premiums of 20 to 30% above the spot price just to get their hands on physical metal. When industrial users start panic buying, that's not speculation, that's real demand that cannot be delayed or substituted. These companies need silver to keep their production lines running, period. Second, the paper silver market is showing signs of serious stress. The ratio between paper silver contracts and actual physical silver available for delivery has reached absurd levels. Some estimates put it at over 250 paper ounces for every one physical ounce. Now, normally this works fine because most traders just settle in cash. They never actually want the metal. But what happens when even a small percentage of contract holders decide they want physical delivery? The whole system could seize up virtually overnight. We've already seen many versions of this in 2020. In 2021, when premiums on physical silver coins and bars skyrocketed, while paper prices stayed relatively flat. Imagine that scenario, but amplified by 10 times the demand pressure. The third catalyst, and this is the one that could really light the fuse, involves central bank behavior and currency instability. We're seeing unprecedented moves in foreign exchange markets this week, with several major currencies experiencing volatility that's making institutional investors extremely nervous. When currency stability comes into question, precious metals historically become the refuge of choice. But here's what's different now. The gold to silver ratio is still hovering around 85 to 1, meaning it takes 85 ounces of silver to buy 1 ounce of gold. Historically, that ratio averages closer to 60 to 1, and during precious metal bull runs, we've seen it drop to 30 to 1 or even lower. If we just revert to the historical average with gold at current prices, we're looking at silver needing to jump 40%. If we see a real flight to safety and that ratio compresses further, triple-digit silver isn't just possible, it's almost mathematically inevitable. Now let's talk about what makes this a true black swan scenario rather than just a regular bull market. A black swan event is something that seems impossible until it happens, and then in hindsight, all the warning signs were obvious. The silver market has several potential black swan triggers that could activate this week or in the coming weeks. One scenario involves a major ETF or financial institution being unable to meet delivery obligations on their silver holdings. This would expose the fact that much of the silver that investors think they own simply does not exist in allocated form. The resulting panic would make the 2021 GameStop squeeze look like a minor blip. Another scenario involves a major mining disruption in countries that produce significant amounts of silver. Political instability, environmental disasters, or labor strikes could take millions of ounces of annual production offline, right, when demand is at historic highs. There's also the renewable energy angle that almost nobody's properly pricing in. Governments worldwide have committed to massive solar panel installations to meet climate targets. Each solar panel requires about 20 grams of silver, And we're talking about billions of panels needing to be manufactured in the next decade. China alone has announced plans that would require more silver than entire years of global production. The math simply doesn't work unless prices rise dramatically to either incentivize more production, which, as we discussed, is limited, or to ration demand through price, which means industrial users bidding against investors and other industries. Either way, prices have to go significantly higher. What's fascinating is how quiet mainstream financial media has been about this setup. While everyone's focused on tech stocks, crypto volatility, and traditional safe havens like gold, silver is sitting in the background with fundamentals that are arguably stronger than any other commodity. The debt ceiling debates, inflation concerns, and geopolitical tensions we're seeing this week are exactly the kind of catalysts that historically precede massive moves in precious metals. But silver, because of its dual nature as both a monetary metal and an industrial commodity, has the potential for gains that dwarf what we might see in gold. So what does this mean for you right now? If even half of what we've discussed plays out, we could see silver breach $50 in the near term, potentially racing towards $75 or even $100 within months rather than years. The key is understanding that this isn't about speculation or hype. This is about supply and demand fundamentals that are more out of balance than they've been in modern history, combined with monetary and geopolitical conditions that favor hard assets. The smart money isn't waiting for confirmation. They're positioning now before the mainstream catches on and premiums on physical metal make entry costs prohibitive. The bottom line is this: we are potentially standing at the edge of a historic repricing in the silver market. The convergence of factors we're seeing this week, the industrial demand surge, the paper market stress, the currency instability, and the supply constraints, creates conditions we haven't seen before. Black swan events by definition catch most people by surprise, but the opportunity is there for those paying attention. Whether you're a seasoned investor or just starting to understand precious metals, keeping a very close eye on silver this week and in the coming months could be one of the most important financial decisions you make. The setup is there. The question is whether you'll recognize it before everyone else does. Thanks for watching, and don't forget to subscribe for more updates.